Smackdown is going to come within the next 9 months into Q1. You're going to have a comeuppance here, maybe driven by the Fed, maybe driven by Trump, maybe driven by war. Who knows? 2011 and 2012 is not to be compared to 2025 and 2026, in my opinion, for gold. The paradigm has changed for gold and silver. There's actual billionaires buying this stuff. There's central banks buying it hand over fist. If you look at 08, 09, right, that whole correction ended March of 09. Look at a chart of SPY or QQQ since March of 09. The set it and forget it crowd has been right, and at some point you will be wrong.
Is the precious metals trade dead? Well, let's find out. John Feneck joins us today. He's the CEO of Feneck Consulting. Welcome back to the show.
Thanks, David. Great to be here.
You know, I like to use the people I know as a good indicator. The friends that I've had who have nothing to do with finance, some working in tech, some working in the medical profession. A couple months ago, they were asking me, hey, is this a good time to buy silver at Costco? It's run out, but should I buy some more? Hey, is this a good time to load up on some gold ETFs? Those are questions I've gotten from people that I've known for years and years. And again, they're not trading professionals. They're not professional investors. I'm not getting those questions anymore with gold at just about $4,200 an ounce right now. It's fallen about 1% today on Monday as we speak, the 22nd. And silver is down about 40% from its highs earlier this year. And these are dramatic double-digit drops from their highs. Gold as well, down about 25%. But we have to remember they're still up about more than triple digits since a year ago. The question is, why is sentiment so weak right now in the precious metal space? Sentiment ultimately drives buying. And so if sentiment is weak, is this going to cause another sell-off? In other words, is this the start of a bigger sell-off, you think?
Right. Well, sentiment's weak because of the war. If you were to look at charts, December, January, February into the war, which was the weekend of the 27th of February, everything looked great. I mean, SLV for silver, GLD for gold as proxies for those metals. Take a look at the charts. 5,600 gold, 120-ish silver intraday. Everything was cranking. But then we had two rug pulls in the first quarter. One was the January 30th sell-off in silver. As you remember, we lost 34% in silver in one day. I mean, that really happened. And then we had the rug pull March 3rd, which was one day after we reopened after the war, right? So March 2nd was actually a really positive day as people kind of looked at the war as like, hey, I need some safety in my portfolio, right, David? And then the rug got pulled the next day when people started to realize that, in a sell-off, everything gets sold, right? And so there were margin calls, and that margin call fiasco just sort of fed on itself through March, in my opinion. Then we had the, April, May, June period, which basically was like, hey, let's figure out what Trump's going to do here, right? And we were calling for a war to be done this summer. We weren't identifying a time frame other than by August, right? Because we wanted to see something resolved by in leading up to the November elections, right? Because my thesis was, how is Trump going to do this, and have this full-on war going on and try to win that for Republicans, right? It doesn't add up. So we saw that MOU, which was the weekend of June 13th. We're figuring that out as we speak right now. And hopefully we're going to move on from this. But the damage has been done, to your point. Mining stocks are getting crushed. A typical correction, David, is down 20%, and something like GDX, we're down 35 to 40%, right? This is actual, pain that investors have felt here. So it's normal for people to think like, hey, is this over? I don't think it's over. I think we're still in a bull market for gold and silver and related.
Why is this not over? Why are we still in a bull market? I mean, we're repeating the same technical pattern as 2012. I'm just playing devil's advocate here. 2012, and that happened at a time when gold fell more than 50% from its highs in 2011. That's according to some technicians on my show, and right. Also we're in a bit of a slump right now. How, generally speaking, when metals see this kind of a slump, what's the turning point for you?
I don't know who you had on your show, but 2011 and 2012 is not to be compared to 2025 and 2026, in my opinion, for gold. The paradigm has changed for gold and silver. There's actual billionaires buying this stuff. There's central banks buying it hand over fist. The dynamic has really changed. Like, let's look at silver, right? Because it's parabolic. That move from Q4 to March 2nd was a parabolic move in silver with the exception of January 30th, right? That was a catch-up trade to gold, in my opinion. That was the precious element of silver showing itself off. We all know that over 60% of it is industrial use now, right? But it is a critical mineral, which is new news. That never happened before last year. And there's continued shortages in silver, and it's being used for more stuff. So I don't know that you can compare stuff to 15 years ago, especially with Trump in office. I mean, Trump is a wild card. Anyone who hasn't figured this out yet, did you have Venezuela on your list this year? Did you have Cuba on your list this year? Did you have Oman on your list? I mean, come on, none of those were on my list. I mean, Trump will do what Trump will do. And people have to understand that we're in a different environment now, geopolitically, because, hey, anything can happen at any time, and it's exhausting. Let's be honest. Like, investors are exhausted. I'm exhausted. Like, people are getting tired of having to look at every single piece of Trump social and look at news every day to see what's happening. We want some consistency, right? Like, in previous presidencies, you could live and die by your own sword. You can't do that now. News is driving things. So the war and the Fed are very important to be continued to watch.
But how come, John, periods of volatility typically should be positive for gold, but the exact reverse happened this year? I ask this question a lot. And,
so I really think that gold and silver got ahead of themselves. I mean, I think there was a lot of hot money in our sector that got margined out. March 3rd was the first day. I mean, January 30th was definitely the day when silver happened, but that was led by shorts, right? March 3rd was more of like a liquidation starting, and then you saw it feed on itself through March into April. So I think it was just an unwinding, David. You go through healthy corrections in metals. This is unhealthy if you were buying at 55 or 5,600. I get it, but we weren't, right? So we were buying cheap and we're going to sell high. I sold some silver over $100. I sold it multiple times because I went on your show and multiple shows saying, hey, when this gets over 100 an ounce, whenever that is, I'm going to be a seller because my cost basis is extremely low. It's under 20, right? So, we're going to reload here when if silver touches high 40s, low 50s, because we think that period on the chart will hold.
After interviewing investors, economists, and fund managers and countless analysts for years, I've noticed something. A lot of people watching my show understand the case for gold. They understand the concerns around government debt and persistent deficits and what's happening with currencies around the world. They've heard all the arguments and all the narratives, but understanding something and acting on it are two very different things. That's where many people get stuck. They keep researching, they keep waiting for the perfect moment, and they tell themselves they'll look into it later. Then years go by. So what we're seeing now is more people deciding to take action, which for some people means purchasing physical gold directly, and for others it means moving a portion of an IRA or a 401k into a gold IRA. That's one reason I partnered with Augusta Precious Metals. What I appreciate about Augusta is their educational approach. They take the time to explain how everything works, answer your questions, and help you evaluate whether precious metals make sense for your specific goals and circumstances. They're not here to make the decision for you. They're there to help you understand your options. No pressure, no hard sell, just information. If you'd like to learn more, visit the website in the link down below or scan the QR code here, lintrustgold.com, or text Lin, L-I-N, to 35052 to receive Augusta's free information guide. What was your initial reaction on January 30th when gold went down, 13, 15% in a single trading session? You called it a rug pull? I mean, when that doesn't happen every day for gold. In fact, it's very rare.
Absolutely. I mean, that was an orchestrated situation. I think JP Morgan came clean and said that they led the silver shorting. Things got extreme. I watched that whole day on my computer, like in disbelief. This is why we talk, David, about institutions being so powerful, right? And whether you like them or not, you have to respect them. Let's look at what institutions are saying about gold really quickly. Okay, I think it's important. As of yesterday, Bank of America reiterated 6,000 gold by the end of this year. Goldman Sachs is at 5,400 by the end of this year. JP Morgan is at 5,050 at the end of this year. these institutions have not typically been friendly to gold over the years, as you know. In fact, a lot of them had shorted over periods of time since the '08 crisis, right? So if that's the backdrop where we're operating in at 41.85 gold, there's some upside here by the end of the year, according to the big banks. I would agree with that. I think that Warsh is going to take some time to get used to, but it's not going to take months and months. It'll take a few months, and then people will come around to his new type of messaging, which is going to be less transparency and more volatility.
Yeah, maybe JP Morgan, maybe somebody else was behind it. Let's just take the actors out of the equation and be neutral on the price action itself. When something like this happens, when something goes down in the silver and gold space, 15, 20% in a single trading session, what do you do as an investor?
It all depends on your cost basis, right? Like I said, my cost basis on silver is under $20 an ounce. So I just hung in there, right? I wasn't going to sell on a panic sell day, because look at the chart of silver, use whatever you want, SLV, or just type in silver on Google, and you'll see that January 30th to March 2nd, David, was a really nice move back up. It was like a V-shaped move. It recovered quite nicely. So did gold. So did GDX. Like, it was a period of time that happened, and some of these are anomalies throughout history where you go back and look at these charts and say, wow, that was a crazy day. Liberation Week is another one, right? Like, this is not ancient history. This is recent history. And Apple lost 24% in 4 sessions. What was that, right? Like, I mean, it's a real company. It's rebounded completely, but that did happen. And I bet a lot of people sold down 15, 20, or 25%.
When you have this much volatility in metals over a trading session and over several trading sessions, is that signaling usually the top for you?
I was extremely concerned after January 30th. I absolutely put out, 2 pieces to my followers immediately saying, this is nowhere near normal. Like, I did it during the day. I did it after the day. I did it, in fact, that morning too. I think there was probably 3 alerts I sent out because I saw the futures were going to be bad. I didn't think it was going to get that bad. I don't think anyone you interview thought down 34% was like a reality for silver in one day. I mean, that's crazy. However, if you look at the ascent of silver from Q4, it got way ahead of itself. The RSI on silver got 85, 90, I mean, whatever. We were selling, again, at that big round number in the sand at 100 all the way up, and probably clipped almost like $1 off the high. We didn't clip the high. We clipped it along the way. We sold probably 8 or 9 times.
The other thing I want to bring up is the divergence between gold and copper. Often seen as a barometer for the economy. It's been trading alongside stocks more than it has been alongside gold. You'll see that over the course of copper and gold's history, they've more or less traded together. If you just zoom all the way out, that's not to say copper follows gold or the other way around. They just held a very steady correlation. Once in a while, this correlation breaks down. This is one of those moments. Ever since the beginning or middle of April, should I say, gold has been trending down, while copper, as denoted in the blue line here, has been going up to new all-time highs, now above $6.30 a pound. So while copper is reaching new all-time highs and tracking the S&P 500, which we'll talk about in just a bit, gold's been having a bit of a breather. What does that tell you about capital rotation in the metal space?
Well, copper is, the last I looked, around 630. I can't see, 636 on your screen there. Anything over $6 is amazing for copper, and it's pennies off an all-time high right now. It doesn't surprise me that we see this divergence because copper is an industrial metal and gold is a precious metal. So copper does better in times of economic strength, which clearly we're in right now. With, the S&P, the NASDAQ just cranking the last few years. Copper, I think, is a catch-up trade here. So I think that copper will suffer if the NASDAQ, the S&P, AI, global infrastructure type projects are going to suffer because copper is going to be thrown into that bucket.
Well, copper is right now following the S&P 500. I don't know what's following what, but it has a very close correlation with the S&P 500. And as others have pointed out, like in this article from Seeking Alpha, without AI and energy, the S&P 500 is actually in the red. So we can make, I guess, the deduction that copper is really trading alongside the AI trade right now. It's following the AI trade. Can you
Sure.
comment on this?
I mean, I would agree. Copper is moving up with AI. AI is all over the place, as you know, in terms of what just happened recently this year. I went to CNBC this weekend, and 12 of the 15 lead articles were about AI, not tech. It's front and center in our world. I mean, look at what happened, last week with the G7. Like, they're inviting all these tech gurus to the G7. It's just, it's part of our world now. And copper is going to be needed. People don't understand that aren't like you and I, David, in our sector and know and understand metals, that you don't flip a switch and just produce more copper. It takes many, many years. Permitting in some of these jurisdictions, even in the US, like Arizona, is onerous. So it takes a long time to pull that metal out of the ground.
The fact that the stock market is still at all-time highs, driven primarily by the AI trade, and the fact that the dollar has not collapsed following the Iran war, what does that tell you from an investment standpoint? Should you be rotating into the tech space?
Get on board with that trade. I have been wrong about tech. We 3 Mays ago got out of the way of our short position, thankfully, in tech. So 3 years ago, but we didn't go super long tech anything. We've been long AI data centers, AI infrastructure names, and I can give your listeners a couple of those. I think that's the way that we've played it, without going out there and buying NVIDIA and some of the headline names. But clearly it's been an awesome trade for people. I would argue, though, that a lot of this has been driven by, people just doing the glide path stuff, David, like that. Yeah. I call it, right? You just put money in the S&P and the NASDAQ, and you just sit back on your porch and put up your feet and have a drink and just let it ride, right? Like, that's a stupid way to invest, because you will get smacked at some point. And I think that smackdown is going to come within the next 9 months into Q1. You're going to have a comeuppance here, maybe driven by the Fed, maybe driven by Trump, maybe driven by war. Who knows? But like, things are going to teeter and fall at some point. It's just the nature of markets. If you look at 08, 09, right, that whole correction ended March of 09. Look at a chart of SPY or QQQ since March of 09. The set it and forget it crowd has been right. And at some point you will be wrong.
Yeah, what's another stupid trade we should avoid this year?
Well, people chasing energy, right? I mean, if you look at USO as a proxy for oil, it took off. But take a look at XLE as a proxy for energy stocks. They've done nothing. So, hot money tends to chase stuff that's headlines, where we all have cell phones now. We all have trading accounts, right? It's just, there's downside risk in oil if we get this thing resolved, in my opinion, over the next 12 months. But I wouldn't call it a stupid trade. I just think it's just, you're not going to make much money. I think real estate's a stupid trade as well, especially if you think that Warsh is going to be raising rates. Yeah. I mean, interest rates going up does not help the real estate trade, which is teetering in different parts of the U.S. I know that where you are in Canada, the real estate market was parabolic as well. So, you need lower rates for this to continue.
What happens once interest rates go up, once the Fed raises interest rate? What moves first? What moves the most?
Well, it depends on when it is. I mean, what you're seeing right now is December, right? So Warsh is giving us plenty of time to prepare for something like that by creating these 5 task groups, right? Like he said on the podium, August to December, I'm going to build this out. Well, okay, that's a long time from June, right? So if he prepares the market for that first 25 bip hike, it's not going to mean much, It just depends. If it's July or September, that's another story. The market right now is not ready for that kind of a shock to the system. So I would expect broad market activity to be poor if you get a hike sooner than expected.
Do you think that the tech stocks, which are driving the rest of the equities markets right now, will still maintain the same momentum regardless of where the Fed funds rate lands?
Look, I have been wrong about the herd mentality, the greed in this market. I'm shocked that we're seeing some of the valuations in tech that we are. I think, David, when you look under the hood, you just threw up a graphic, right, about the narrow leadership in the S&P. Look at last year. I mean, the Mag 7 created a lot of that alpha in the S&P. In the previous 2 years, even more so. So at some point, when you don't make money in these Mag 7 or AI type names, it's going to affect indexes greatly. And that's where people have the majority of their money. They don't have the majority of their money in mining stocks. They have the majority of their money in their 401k and their 403b. And they're going to wake up one day, and see a liberation week, maybe over a month, right? Where they lose 20% in a month and are like, what the heck just happened to my future retirement savings?
Well, so what happens then to gold and silver when the interest rates go up?
Yeah, it just depends again.
You said it goes up. Now that's so I want to just bring to people's attention that gold and silver historically have held an inverse relationship with interest rates. That probably may have explained somewhat why gold is down in the last couple of months, because the 10-year went up. Of course, nothing really likes higher interest rates. In 2022, when the Fed started raising rates, stocks went down, gold went down, bonds, of course, went down because yields went up. Like you said, it depends why the Fed is raising interest rates, because if they're raising into a recession, perhaps gold might be a good hedge against more market volatility. But what do you think is the thesis here?
So just to restate, I don't think I said, and if I did, I'll correct myself, about gold performing well when interest rates rise. Like, I think it just depends on the timing, David. Like, if we get a hike in July 29th or whatever the next meeting is, gold's not going to like that. Silver's going to sell off. The whole complex will sell off because that's not expected, right? Gold and silver don't produce a yield, so they're going to perform worse when rates rise persistently. But I don't see that Warsh has that many bullets in the chamber to be able to do that. Like, you can talk whatever game you want out of the gate, but then you have to deliver, and you've got Trump watching you like a hawk, right? So I personally feel that we called this, right? We called for him to be aggressive. I thought it was more aggressive than I expected. But I also called for, in 6 to 9 months, let's take a pulse of what's happening at the Fed. And I think what's happening then would be a more moderate tone and less aggressive, with less surprises, right? Because things just have to get in line, especially that could be fueled by a market sell-off, right? So I just don't see where we're going to be raising rates like in a cycle. Remember back in 2016, we met a little after that, but Janet Yellen stopped the party at Jackson Hole, August of 2016, and gold and silver took it on the chin until January of 2019, when Powell spoke at an event and was dovish, right? That took 2.5 years. And look at the charts in 2016, 17, and 18 after that August move by Yellen. It was brutal. Yeah. That's not what we're entering right now. It's not going to be like 2.5 years of pain here.
So in 2025, I have here on my screen, in 25, gold was up more than 50% over the course of 2025. The S&P was up 15%. So gold very obviously outperformed stocks as a whole last year. Now, this year is a different story. The S&P is up about 9%. Gold is down 3%. So my question is, what would trigger a repeat of 2025 such that we have a reversion of capital back into the precious metals, away from tech stocks and equities?
Well, gold historically has been driven by fear and uncertainty. And we had a lot of uncertainty last year. We didn't have the fear trade, though. And that's why we didn't get follow through to higher prices in March, right? Like, you would think the fear trade would have been the war, but it was more like a marginable event where people went over their skis with these positions in gold, silver, and related and got smacked in March. And then the selling just fed on itself. I think you need the fear trade to ignite, meaning like the U.S. debt, which is already knocking on 40 trillion, gets really out of hand, or, Warsh is just like very independent from Trump, and then Trump and Vance dig in on Iran or other parts of the Middle East. Like, there's plenty of things that can go wrong. And I hope for none of them to go wrong. I think that the world is very uncertain these days, David, and you have to be able to hedge in your portfolio. JP Morgan just interviewed 3,300 different family offices in the US with over a billion AUM. Okay. So these aren't small little people. Like this is a billion minimum. They had a 0.8%, point 0.8, less than 1% of their money was in gold, silver, or related. No one is hedging anything with 1%. And this is the problem with investors in general, brokers, hedge funds, private equity. They think they're all that smart, but they're not hedging anything. They're full on market exposure. And that's how you get smoked. Ask those guys in 08, 09 if they wanted some protection. Ask those investors of 2000 to 2003 if they wanted some protection. We are a speck in the middle of the overall environment. I never lose sight of where I am. Like I'm a popular guy in a sector that is less than 1% of the market. So who cares, right? Like until we get to be 2, 3, 5% of the global, investable world, if you will, we're not really that important in terms of like what the average Wall Streeter thinks about us, right? So I think people need to just take a step back, look at their performance, feel like very grateful for all the money they made in real estate and the stock market over the last number of years, and then talk to your financial advisor and just say, what do you think, Mr. Advisor? Where are we headed over the next 12 months? Don't tell me what I just did in terms of performance. Tell me where we're headed and see what they say.
Yeah. So ultimately, where are we headed in the next 12 months? That's a great question, Mr. John Feneck from Feneck Consulting. We're here to get your opinion. So we've talked a lot about what you think is going to happen with the macro picture. What does that mean for this gold cycle and stock market cycle that we're in? You said gold is still in a bull market. Let's start there.
Yeah. So look, as I said, B of A at 6,000 an ounce, Goldman at 5,400 an ounce, JP at 50 an ounce. These are major institutions. The only one who's really pulled back their estimate, David, is Citi, and they've been correct, right? Like, I mean, let's hand it to them. They've made a correct call. But when you have everyone on still the bullish side of the ledger, with the exception of Citi and a few others, I think the environment looks really good from an institutional standpoint. The central bank buying isn't going to stop, in my opinion. The average retail guy got his hand slapped here, and that's good. You need to shake out weak hands when you're, moving in a bull market. You need to have these corrections, right? But this one, it just feels like it's overdone because of the war. If you don't believe me, look at the charts. The charts don't lie. Everything was great up until the war announcement. We had one good day, March 2nd on Monday, and then March 3 started the selling, and it really hasn't stopped. And the only time we got some relief there, David, if you look at the chart, was it looked like a leak on June 12th, where going into the weekend when the MOU was announced, it looked like people started to buy our sector again, meeting GDX and J. And then the 15th and the 16th were really positive days. And then the 17th, guess what? Kevin Warsh gets on the podium and crushes the sector again. So for people that say this isn't war driven, I disagree.
I know you've been a popular name in the space for quite. Sorry, I cut you off. Please continue.
No, that's okay, David. Go ahead.
I know you've been a well-known name in the metals and commodities space for quite some time, and you've been an investor in this space for quite some time. What hypothetically would prompt you to sell your current holdings, and we can talk about that, and rotate into a completely different sector, whether it be related to AI or not? I'm not saying that's going to happen, but we always have to ask ourselves, what if there's a better opportunity?
Yeah.
Would that day ever come? And if so, why?
Sure. If the charts break, meaning gold drops below, 3,000 to 3,300, where it kind of broke out from. If silver breaks 50 to the downside, which was former resistance for many, many, many years, like those are red flags, and you have to sell, and because there's going to be further pain technically to the downside after that. Will it sell me out of the whole sector? No, this is what I do for a living. I'm just saying, like, we will be watching the price action carefully. In terms of me, rotating money into other sectors, I buy healthcare stocks, I buy energy stocks, I buy other stuff already, but there's plenty of opportunity always for a value investor if you look, making those phone calls, attending conferences. I do everything that an investor can do on their own. I just go do it. And it takes a lot of work. So it's up to the average person out there. But I'm always challenging myself, David. Like when you and I met, I guess 5-6 years ago, I didn't even know how to spell tungsten. I didn't know how to spell antimony. And now it's a huge part of my portfolio. So I've evolved into a critical minerals believer, if you will, over the last 3 or 4 years. And look at what happened since then. Project Vault, $12 billion. US Exim Bank, $100 billion. These are recent events in the last 6-7 months. So, sometimes you have to pivot away from the thesis of just gold and silver to include other things in the commodities complex.
So let's talk about that. We'll close off. The other bigger themes or trends in the investment space that you have been following and how you're playing those trends. You've mentioned some critical minerals. I'm curious to see how that fits into a broader macro theme.
Yeah, sure. So if you look at REMX, that is the ETF of choice, I suppose, that investors use for exposure to things like rare earths, tungsten, antimony, et cetera. I don't use it because I like to buy the individual names, but you can tell it hasn't done that poorly, right? It's bottomed in 2025 and just sort of took off on the Trump EO. You can see there in March, April, when he was talking about fast tracking and such, and a lot of these companies caught a bid. But we love the tungsten theme. Tungsten is 86% produced in Russia, North Korea, and China. None of those countries are our friends currently, and they're not going to give us any metal. In fact, China cut off Japan this year. So they're not going to give us any of it. We have to produce it ourselves. Challenge is we haven't produced tungsten for 11 years in the US. So how do you do that? So when I was speaking at my Washington, D.C. conference last month, David, I actually met some people from the DOD and DOE, and they're writing a white paper on tungsten in August. So I had a first Zoom with them last week. I'm having another one next week to just give them some feeling of how difficult it is to produce tungsten in our own country, right? Because of permitting, because of the financial, land blocks, First Nations, you name it, whatever it is, there's always a reason for these things to take forever. So in tungsten, we like, we've talked about this on your show before, Guardian Metal is a big cap name, GMTL.
What's the GMTL?
GMTL, yeah. We own this one in full disclosure. You can see they upgraded to the NYSE recently. So if you look at GMTLF, if you add an F to that ticker, you can see a longer dated chart. We started to talk to you, about this to your investors at probably 20, 30 cents. I mean, it's just been a home run for us. But they got a $6.2 million check from the government last year. And then they did a $21 million financing, announced that they were bringing in a billionaire in Stan Druckenmiller, who owns 14.9% of the company. They've done everything right. They're in Nevada. They're talking to the government about future non-dilutive, funding, and they're putting out their PFS here within 2 or 3 weeks, where they're going to say, here's our CapEx, and here is what we're going to have to do to fund this thing. And at that point, investors can get a better feel for what they're going to do. But smart management team in the right part of the world, 2 mines in Nevada. We like Western Star also, which is WSR.
Sorry, one second before we move on. So this stock has already run up considerably. I mean, you've probably locked in a lot of gains. I mean, at what point do you think to yourself it's time to take profits versus staying in it? How do you make that decision right now?
Good point. So when GMTLF became GMTL, meaning they uplisted to the NYSE, they have both tickers currently. But now they brought in a lot of liquidity through GMTL, right? So that's where you see that move in the chart from, let's say, 260 or 280 all the way to 425. We were getting out at, 394, 425 a little bit because the stock got ahead of itself. And as you can see, it kind of double topped there. So that's really your next resistance point is 4 to 425, if you will.
Mm-hmm. Yeah. Generally speaking, I mean, we don't have to be talking about GMTL in particular, but just generally speaking, what keeps you in a stock versus selling it, whether you're cutting your losses or just taking profits?
I am vigilant on the phone. I am totally old school. I pick up the phone and call and say, hey, what does this mean to your stock? Or, hey, I saw that news release. I don't understand it. Or, hey, Like tell me about your catalyst for the next 3 to 6 months because I'm not that patient and I want to know what's happening, right? And a lot of investors don't have the luxury of A, having a CEO on speed dial, but also B, having the luxury of the time to do this. This is what I do for a living, right? So I'm constantly on the phone with CEOs. I talked to probably 7 or 8 today. I'm always looking for an edge based on public news. So with this story, I just kept in touch with Oliver every month, like for the last 2 or 3 years, and he's kept me in the stock. He's done a really good job of telling me this is what I plan to do. This is how I'm planning on executing it. I'm talking to the government about non-dilutive funding, and as soon as you get the first check, it opens the door to other checks, etc.
Yeah. Okay. What's the next stock you wanted to talk about? You mentioned another one.
That one is WSRIF. We own this one as well.
WSRIF.
Yep.
Western Star Resources.
Yep. So you can see here that the stock just started to get some life in 2026. It peaked out. It got a little bit ahead of itself. You can see that, big red candle there.
What happened? What was this here?
Oh, that probably was a split or something. I wasn't tracking the stock back then, but this year I started to track it. So this is a new relationship for me. I've known Guardian for 3.5 years. I've known Blake here for about 4 months. But again, I'm always open to new relationships. The stock just has no shares out, David. It's got 20 million shares in the float. They just raised some money, so that number is now larger. So you can just go to westernstarresources.com and take a look at their current cap structure. But let's say it's 35 million shares out, still extremely tight. We identified that there was a short seller in the stock for most of the month of all of the month of June and part of the month of May, and you can see it in the chart here because we were seeing volumes that didn't make sense, like 400, 500,000 shares a day, and there's only 20 million shares out, and we're like, this is weird. So we did some homework and found that there has been some short selling in the stock. It's not immense; it's probably like 5% of the float. But it's been enough to really hurt the stock, as you can see. So that's a cautionary thing for your investors is when a stock starts to get really ahead of itself, as this one did, sometimes nefarious parties will come in and hit the stock. And you have to be understanding that you're going to have to ride those things out. You have to look at yourself. We have to look at a case like this and say, man, these guys are in Nevada, just like Guardian is. Blake has got probably more experience than Oliver does as leader in terms of tungsten. He's been in the field for many years, and they have the highest grade of any tungsten project I've seen. Their historic grade is over 3% tungsten. The average grade on a tungsten junior project is like 0.3, 0.4. So it's got a lot of upside in our opinion.
Upside meaning takeout potential. Is that what you mean?
No, upside from here, meaning like at 28, 29 cents where you just saw in the chart US. I mean, we just hit 65 cents before it pulled back. So I think we're going to revisit that, 55 to 65.
What's giving it the upside? The tungsten price itself going up?
So the tungsten price is remaining stubbornly high. We started the year January 1st at a spot price of 920. We're trading at 3,000 spot right now. I mean, it's insane. It's one of the best subsectors to follow. Tungsten is the primary metal in a lot of defense-related stuff. Armor, tanks, piercing bullets, missiles, we need more of those in the U.S. And it's not a replaceable metal. Remember, we talked about catalytic converters years ago, and we were talking about platinum replacing palladium, right? That's not happening in defense-related stuff right now, at least for tungsten. So I think that, there's no futures market for tungsten. There's no ETF that tracks tungsten price. This is one of those little subsectors that's pretty interesting. There's about 20 total names that are public, and I just gave you 2 of them.
Okay, so my final question. Let's suppose the AI trend is here to stay. It's not a fad. It's a mega trend. How would you play that as an investor other than getting directly involved with the big names and perhaps the even smaller AI names themselves? In other words, a periphery industry around AI, how would you play that?
Yeah, great question. So on your show last year, I brought up a stock called First Tellurium, which is FSTTF in the States. It's FTEL in Canada, FTEL. I got into this stock a few years ago because of their tellurium. I looked around and I said to myself, who has a tellurium stock, large cap or small cap? There's literally one that has it in its name, and it's this stock. So I'm not saying that other projects don't have some tellurium on them. I'm saying that this company is focused on tellurium. Now, as a junior company, you have the same problems you have like any junior. You have to raise capital all the time and dilute shareholders, right? But Ty and his wife own 15% of the entire float. They've put a lot of money alongside investors, which I like, because they believe in what's happening. So they bought a position, David, in this company called Pyro Delta, which is their subdivision, which is heavily focused on AI data centers. And they built this thermoelectric device that actually can help with cooling off data centers. But they are also very active with that same technology in the drone market. So it's kind of like a defense play and an AI play, which to me is like amazing because, you know, AI is your momentum type and defense is defense, right? I mean, like if you're buying defense stuff, you're kind of hedging a little bit. So I like that stock a lot. Outside of that, I'll give you one more. So Jericho Energy, JROOF in the States and JEV in Canada. I've been in this stock for a long time. It's got a couple billionaires in it. It's basically an oil and gas play in Oklahoma, pretty boring. Then they rotated into hydrogen a few years ago. And now they're getting into AI data centers and infrastructure in the US. So they're in Oklahoma. They did a joint venture with a bigger company called Comstock recently for $10 million US. And the stock just exploded higher. So I think you're going to see some good things out of that stock as well.
Well, thanks for your time. We'll follow up with you next time and get more insights. Thank you, John. Where can we follow you?
Sure. It's fenneckconsulting.com. You can take a look at my 10-year performance in mining there. We don't break it out by like gold and silver. We're using stocks like the ones we gave you today in these little periphery areas to generate alpha over long periods of time. And if you check out feneckconsulting.com, you can learn more about what we do.
Okay, good. We'll put the link down below. So make sure to follow John there. Take care for now, John. Thank you for coming on the show today.
Of course, David. Thank you.
Thank you for watching. Don't forget to like and subscribe.